Good evening and welcome to the Financial Week. I'm Javon Keys. President of the Jamaica Manufacturers and Exporters Association, JMEA, is urging the exploration of more nearshoring opportunities. While delivering the Fair Trading Commission's Shirley Playfair lecture, he says the country should revisit the large manufacturing for export agenda. The pandemic forced companies to find new trade linkages as original source markets to include China came to a crunch, a shift which presented new export opportunities for countries like Jamaica and a dynamic stakeholders think should be expanded. One aspect of that, nearshoring, which is when companies shift parts of their operations to another country that's close by. President of the Jamaica Manufacturers and Exporters Association, John Mafood, says Jamaica must get more of that pie.
In the same way that there is an opportunity for Jamaican companies to export to CARICOM, to export to the US because of the differential rate of shipping rate and the differential in shipping time, creates the opportunity for foreign companies to nearshore in Jamaica.
He says with that comes certain advantages.
Shipping costs from Jamaica to Miami is less than $2,000. To New York, it's $2,005, and the transit time is a couple of days, versus that uncertainty of shipping from China.
Mr. Mafood says while there are some things that make Jamaica attractive for these opportunities, it's not an easy sell.
Because our population and our market is relatively small, so they won't have a domestic market that's strong. They will have to justify nearshoring on the basis of what they can do in terms of selling to the region and selling to the US. Many years ago, we did have something similar to that when we had this 807 garment manufacturing arrangement where companies manufactured here and shipped to the US duty-free. That's something that can still work in Jamaica.
He says making electricity costs more competitive would help encourage these kinds of investments. To some company news now, the merger of the RJ Aglena Communications Group, or parent company, and 1834 Investments is now official. The court order sanctioning the scheme of arrangement to merge the group and 1834 Investments was submitted to the company's Office of Jamaica this week. That means all assets and liabilities of 1834 Investments have been assumed by the RJ Aglena Communications Group. Shareholders of 1834 Investments on August 10 agreed to the merger proposal. Investors who elected to receive shares in RJ Aglena will have them issued within the next week. Those who opted for cash will receive payment within the next 2 weeks. The merger brings $1.5 billion in cash and assets into the group. The RJ Aglena Communications Group, which again is our parent company, said it plans to use the funds for aspects of its digital switchover and other projects. Let's head to the currency market now. The US dollar is being sold for an average $154.52. The Canadian dollar is going for an average $115.39. $189.82 is the going rate for the pound, while it's costing an average $164.33 for the euro. The JSE index declined by 1,597 points today, while the junior market index lost 11 points. Among the winners were CAC 2000 9.5% shares, 1&1 Educational Services, KLE Group, Indies Pharma Jamaica, and JMB Group 7.25% preference shares. The losers included Portland JSX, Spurtree Spices Jamaica, JMB Group 7.25%, Key Insurance Company, and Berger Paints. And that's the Financial Week. I'm Javon Keys. Good evening.